A warm welcome to Tax File. I am your host, Laure Bala Hassan, and today's episode is filled with rich insights you won't want to miss. We'll start with a roundup of the latest tax news, keeping you informed on the most relevant updates. In our Did You Know segment, we'll reveal some useful tax facts. You'll also hear from the public in our Vox Pop segment as we capture diverse opinions on pressing tax issues. Then we'll break down those perspectives further in the Knowledge Zone, offering clear explanations and deeper context. Up next is What's on the Net, featuring your questions and comments from our social media platforms with our responses. Finally, we'll bring you a brief recap of evolution of the Nigerian tax system and some of the benefits of the newly signed tax laws. It's going to be an enlightening journey. Let's get started. And now, the news. President Bola Ahmed Tinubu has officially signed the 4 tax reform bills into law, marking a new chapter in Nigeria's journey towards economic transformation and efficient revenue generation. Ejura A2 Okpanachi has that report.
Speaking during the signing ceremony of the 4 bills, the Nigerian Tax Administration Bill, the Nigerian Revenue Service Establishment Bill, the Nigerian Revenue Service Bill (NRS), and the Joint Revenue Board Establishment Bill, President Tinubu described the move as a courageous step in nation building. It was initially difficult, but not all roads will be easy in building a nation. We have provided leadership and courage in the face of disputes. Nowhere in the world will tax reforms be easy, he stated. He emphasized that the reforms will open new doors to business opportunities and signal Nigeria's readiness for global investment.
In process of nation building, even the block work takes a bender and concrete cement to build the body. It's what you have provided is leadership and courage in the face of mounting dispute. Nowhere in the world that tax reform will be any easy.
Highlighting the significance of the reforms, the president said, "What we did a few minutes ago is the way forward for our country's prosperity. Leadership must help people take off and lead the way and navigate every turn and twist. We must help them reach their destination."
We are in transit. We have changed the road. We have changed some of the misgivings. We have opened the door for new economy, business opportunity. We are showing that Nigeria is truly ready and open for business. Easy in, easy out.
You did not dictate anything to us. You only asked questions. And the fact that when it was so tough, you said to me that I should just keep on, and you know this will not be easy. That leadership is the reason why we're here today. We're grateful to you, Your Excellency. And history will remember you for good, for transforming our country, because we know this is an important reform. We're so happy today, and may God bless Nigeria. May God bless you, Excellency.
Mr. President, today is the happiest day of my life. This is the dream come true. The generation on board is grateful to you. You've changed the financial landscape of this country. Thank God we are here to witness this. In a few months, Nigeria will continue to confirm the courage, dedication, and most importantly, the lesson that I will take during this course. God bless you, sir.
The chairman of the Presidential Tax Reform Committee, Dr. Taiwo Oyedele, has described the newly enacted tax laws signed by President Bola Ahmed Tinubu as a major step towards rebuilding public trust and enhancing transparency in Nigeria's tax system. He stated that the reforms are designed to meet global reporting standards, simplify compliance, and make tax evasion difficult and costly. Without transparency, you cannot build trust, he said, stressing that Nigerians should feel confident that their taxes will be effectively utilized. Swateku has the reports.
Responding to the concerns about the new Nigerian Revenue Service (NIRS) becoming overly powerful, Dr. Oyedele dismissed such fears, noting that the focus is on harmonizing taxes to improve the economy, not centralizing control. He emphasized that good governance structure, not the size of revenue, are what matters most. There are checks and balances. It's about the Nigerian people, and they should be able to ask questions, he stated.
These reforms are not about raising more taxes. I think people get it wrong. A lot of people, including analysts and commentators, will say, oh, where are they going to get the more taxes from? Nigerians are poor. This is exactly trying to relieve people of the burden of taxes. These tax laws, they are now laws, are pro-poor in particular. More than 1/3 of workers in both the private and public sector will now be exempted completely from PAYE. They will not have to pay personal income tax. Small businesses, over 90% of small and micro nano businesses will no longer have to worry about paying corporate income tax or charging VAT or even deducting withholding tax or paying PAYE for their employees. What this means is that there will be more money in the hands of the ordinary Nigerian to take care of their daily needs. In addition to that, these laws also provide what we call zero rate of VAT on essential consumption. What does it mean? It means any traces of VAT in food, in education, in medical and health care is now removed completely. So we should see prices of those items come down. In addition to that, transportation, accommodation and housing is exempt from VAT. Our analysis, which was very clear, is that these items collectively account for more than 80% of where Nigerians spend their money. That's a huge relief for them.
Dr. Oyedele added that the new tax laws are people-driven, aimed at promoting equity and fairness across all economic levels. The reforms ensure that the tax burden is spread more justly, with low-income earners protected and the wealthy contributing more.
We also have provisions in those laws to help us improve efficiency. Efficiency in how we collect taxes and also efficiency in the transparency of reporting the taxes we collect, which we expect should then be linked to how those taxes are utilized for the purpose of the people. This is really revisiting the social contract between the government and the people.
In a significant move aligned with Nigeria's sweeping tax reform agenda, the executive chairman of the Federal Inland Revenue Service, FIRS, Dr. Zach Adedeji, has officially confirmed that the agency will undergo a name change to become the Nigeria Revenue Service, NRS. This landmark shift, according to Dr. Adedeji, will take effect from January 2026. Ejura Etu Okpanachi has that report.
Speaking during a press briefing in Abuja, Dr. Adedeji expressed excitement over what he described as a historic milestone in the Nigeria's tax and revenue administration journey. He emphasized that the rebranding of FIRS to NRS is not merely cosmetic, but a strategic transformation aimed at aligning the agency with global standards in revenue collection, transparency, and efficiency.
Based on best practices globally. Because when you have this kind of change, it takes time for all the stakeholder participants, operators, and even the regulator to change the system. So with the magnanimity of the National Assembly Mr. President. So the effective date will be January 1st, 2026 by the special grace of Almighty God. So we have full 6 months for both sensitization, planning, and also considering the fiscal year of the government. Because when you have this kind of change, it's not what you do mid-year, because if the application of law is better, you start from the beginning of the year. So effective dates, by God's grace, will be 1st of January 2026.
This renaming forms part of broader fiscal reforms initiated by the Tinubu administration, which has just seen the signing into law of 4 key tax reform bills. These legislative instruments are designed to harmonize Nigeria's tax structure, improve the ease of doing business, and strengthen government revenue without burdening citizens. Dr. Adedeji noted that the Nigerian Revenue Service would take on a more expanded role, consolidating revenue functions previously handled by agencies such as the Nigerian Customs Service (NCS), the Nigerian Upstream Petroleum Regulatory Commission (NUPRC), the Nigerian Ports Authority (NPA), and the Nigerian Maritime Administration and Safety Agency (NIMASA). This consolidation, he said, will reduce duplication, eliminate leakages, and build a more accountable tax ecosystem across the country.
You're still watching Tax File. Let's now take you through the evolution of tax system in Nigeria. In the pre-colonial era, tax practices were rooted in local customs. The House of Fulani Emirates used the Islamic taxes like zakat and jangali. The Yoruba kingdoms collected levies like ishakole in kind, while Igbo societies relied more on communal contributions than formal taxes. The colonial period, 1861 to 1960, introduced structured taxes such as personal income tax and customs duties to fund the British administration. Native authorities were also empowered to collect taxes, though this caused friction and sparked resistance like the Aba Women's Riot of 1929. After independence in 1960, Nigeria began reforming its colonial tax system. By the 1980s, economic pressures led to the adoption of the Structural Adjustment Program, under which value-added tax (VAT) was introduced in 1993, shifting focus to consumption-based taxation. With democracy restored in 1999, Nigeria pursued more ambitious reforms. Expert-led studies in 2002 and 2004 proposed comprehensive changes across all tax types. This led to milestones such as the restructuring of the Federal Inland Revenue Service (FIRS) in 2007, the adoption of a national tax policy in 2012, revised in 2017, voluntary compliance initiatives like VADES and VOAs, the Finance Acts from 2019 to 2023, updating tax laws annually to reflect government priorities. And in 2023, the formation of the Presidential Committee on Fiscal Policy and Tax Reforms, tasked with creating a simpler, fairer, and more productive tax system. October 2024, President Tinubu transmitted 4 new tax reform bills to the National Assembly. January 2025, Nigeria Governors Forum endorsed the bills after agreeing to a new revenue sharing formula. In June 26, 2026, the President signed all 4 bills into law, which will take effect nationwide in January 2026. And now, let's look at some of the major benefits of the newly enacted tax laws. Swateku has the reports.
In a bold step to strengthen Nigeria's economy and give more power to states, President Bola Ahmed Tinubu has signed into law a new set of tax reform bills. The key benefits of the new laws include the allocation of 55% of value-added tax (VAT) revenue to state governments. One of the biggest highlights is the new value-added tax (VAT) sharing formula. 55% goes to state governments, 35% to local governments, and just 10% to the federal government. Now, here is how the state's 55% share is divided. 20% is based on population, 50% is shared equally among all states, and 30% is given based on how much VAT a state generates. In addition, many Nigerians stand to benefit directly. Lower income workers will be largely exempt from income tax. For example, anyone earning 800,000 naira or less annually pays no tax under the new rates. Essential items like staple foods and healthcare are now zero rated for VAT, reducing the cost of living. Small businesses gain simplified treatment. Firms with annual sales under 50 million naira need not pay corporate tax and won't have withholding taxes deducted on payments. This reduces paperwork and increases the cash flow. Larger companies also benefit from the corporate rate cut to 25% by 2026 and clearer rules on incentives. Streamlining the tax code and reducing multiple levies should further reduce bureaucratic burdens on all firms, encouraging investment and expansion. State governments may see improved revenues through better coordination. The Joint Revenue Board is meant to allocate taxes more predictably across federal and state taxes. Overall, ordinary Nigerians keep more of their money under the new system, aligning with the reform's goals of tax justice.
Let's now join Mariam on the Vox Pop segment.
Hello and welcome to another edition of the program. I am Mariam Julde Adura. Today, we're on the streets once more to find out what everyone understands by the phrase tax expenditure. Please, we would like to find out what you understand by the phrase tax expenditure.
Yeah, tax expenditure, as the name implies, it is expenditure referred to government revenue losses. This is as a result of exclusions of some taxes and equally tax credits granted to some companies, exemptions, and equally preferential tax rates. These are what tax expenditure represents. Yeah.
Thank you so much.
Thank you very much.
We want to find out from you what you understand by the phrase tax expenditure.
Oh, tax expenditure. That can be explained as the losses the government incur by giving incentive to the taxpayers.
We would want to find out what you understand by the phrase tax expenditure.
Okay, tax expenditure, what I understand by it is, these are, for example, like cost of collection on government parts, exemptions that government give. These are revenue losses that the government incur in the process of maybe collecting taxes, even withholding credits, waivers. These are some of the examples that I can give about tax expenditure. So that's my own understanding of tax expenditure.
Thank you so much.
You're welcome.
We would want to find out what you know is the phrase tax expenditure.
Okay. In Nigeria, generally tax expenditure are the losses incurred by the government from the expenditures incurred in the preferential treatment given for taxes. This expenditure can be from tax exemption. They give exemption to some people on tax. So this tax exemption is a tax expenditure because the government is not gaining from it, rather they are losing money. So it's just preferential treatment given to companies, to individuals on like tax incentives too. When you give tax incentives, it's an expenditure because money is flowing out of the government coffers, it's not coming in. So it's written off as expenditure on the part of government.
Oh, thank you so much.
You're welcome.
Did you know certain goods and services are exempted from value-added tax, such as basic food items, medical services, and educational materials, etc. For more information, visit our website on www.firs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into interesting conversations had earlier on the streets. I remain your host, Ashu Abe. In this episode, we'll be talking about tax expenditures. What are tax expenditures? Tax expenditures refer to revenue losses incurred by the government due to tax provisions that deviate from the standard tax system. These provisions, such as exemptions, deductions, or preferential tax rates, effectively reduce the taxpayer's liability, resulting in a reduction in government's revenue. Essentially, they are a form of government spending, similar to direct expenditures but achieved through the tax system rather than direct budgetary allocations. Tax expenditures in Nigeria, like many other countries, are used to incentivize certain activities, sectors, or classes of taxpayers. This can take various forms, including tax exemptions, waiving the tax obligation of specific income or activities, tax deductions, allowing taxpayers to reduce their taxable income by certain amounts, tax credits, reducing the amount of tax payable directly, preferential tax rates, applying lower tax rates to specific income or activities, tax deferrals, allowing taxpayers to postpone tax payments. Examples of tax expenditures in Nigeria include VAT exemptions, tax holidays for pioneer companies, capital allowances. Over to you, Laurie.
Over now to Swateku for What's on the Net.
Hello and welcome to What's on the Net. My name is Joyce Swateku. At Uche Onwoke Modes 1 is asking, please, whenever I search for my TIN number on the platform, it always says not found. Please, what should I do? How to fix TIN not found issues. If you can't find your tax identification number TIN on the FIRS platform, check your details. Make sure your TIN, RC and BN or phone number is entered correctly. Be patient. New TINs may take time to appear. Ensure your tax info has been submitted. Try other options. Search with your CAC number or registered phone number. Contact FIRS or SIRS. Reach out for help if online searches fail. Visit a tax office. Go in person with your ID, BVN or CAC documents. Keeping your information updated will make the process smoother. At Deji_Seed is asking, I have registered for individual TIN since March. I'm yet to get my TIN. What could be the problem? Reasons for TIN application delays and what to do. Your TIN application may be delayed due to incomplete documents, that is, your ID card, utility bills, birth certificate, incorrect or inconsistent information, technical issues or system glitches, high volume of applications, ongoing verification by tax authorities. To resolve these, contact FIRS or your state IRS. Follow up regularly. Provide any extra documents if requested. Taking these steps can help speed up your TIN processing. Back to you, Laurie.
And that brings us to the end of this episode of Tax File. I hope you're walking away with fresh insights and a clearer understanding of tax matters that affect you. Connect with us on social media. We are always ready to hear your thoughts. Until next time, I am Laurie Bala Hassan. Keep watching Tax File. FIRS, simplifying tax, maximizing revenue.